Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right.
Hello, Bruce.
Happy Monday.
Yes, sir. Yes, sir. Great
Only
weekend.
5 more days till Friday, baby.
I don't really care what day of the week it is.
Doesn't matter.
I take days off in the middle of the week sometimes. I work all weekend sometimes. I'll be working this weekend, probably doing an open house at one of my new listings. So,
I had a great weekend. I got some great new business came in. My phones were active.
That's great.
I was on call on Sunday and picked up a couple of builder transactions. And so things are starting to heat up. But one thing I want to tell you, because one thing I always want to do with this program is be really honest and open with our listeners, because we've got realtors, we've got clients that listen to this. So I saw on Fox News this morning that the average sales price in United States right now is $419,300. And you need to make about $121,000 to afford that house. Now, that's pretty doggone difficult for a first-time home buyer to do. Wouldn't you agree?
For sure.
Right. So that's tough. Now, just 3 years ago, it was only $85,000. So that's a $45,000 increase in income that you have to make in the last 3 years.
Yeah, it's crazy and I know for the most part, people's paychecks haven't gone up that much, right? I mean,
of course they haven't. And the cost of inflation is just robbing people's bank accounts right now. So the first-time home buyers are definitely, they're definitely feeling the struggle. And I think a lot of them understand it. They want to get out of renting, but they just look at those payments on those interest rates and they're like, man, it's too much. But I'm going to tell you something. We have to pay the price for the things that we want the most. And if you don't want home ownership and you want to keep renting, keep in mind you're paying 100% rent, 100% interest. There's nothing going toward your savings.
Right.
Where if you buy now, you can always refinance later. And rates will go down. But
sure,
what people look at is they're going to go, well, then I'm going to wait for rates to go down. So tell me then, Tom, why don't we think that's the best idea?
Well, I mean, first of all, we've gone through this numerous times, right? You're going to miss out on appreciation while you wait, right?
Yeah.
The other thing is that, we don't have a crystal ball to know exactly when rates are going to drop. They will, absolutely. I can guarantee it. Whether it's 1 year, 2 years, 3 years, 10 years, 20 years, or 30 years from now, I have no idea. But eventually, I'll be right,
But one thing is going to go along with that is appreciation.
Appreciation is going to happen all the time. So, I think I don't remember your numbers, but I know we looked at a period from around 1970 something, like 2 or 3, through about 1991 or 2, where if you would have waited all that time, you missed out on hundreds of thousands of dollars of appreciation.
Yeah.
While you waited for
that was 1971. Interest rates were 7.33%. If you waited for them to drop, you waited 22 years.
Exactly.
And home prices went up 4 times in that type. So waiting is never the right thing to do. I know it's painful, but you know what? You used an analogy the other day for me that I thought was right on par. I want to be a doctor, okay? But I don't like school that much. But if you're going to be a doctor, you better suck it up, because the payoff is unbelievable.
That's right.
The payoff is there. So there's always a price to pay. There's no such thing as instant gratification that stays. It does not sustain itself.
Correct.
If you're going to get something that's worthwhile, you're going to have to pay the price for it.
Absolutely. Absolutely. Speaking of paying the price, this has been big news for the last couple of years, ever since that Surfside condo collapse, right?
Okay. Yeah.
So Florida has passed some legislation. There's 3 bills now. Okay. The first bill was the milestone inspection bill.
Yes.
So that's the one that dictates that every 30 years or 25, if the property is close to the coast,
Yep.
And then every 10 after that, the building has to be thoroughly inspected by a structural engineer at the expense of the homeowners association, which, let's face it, is the homeowners, right? So, you know, a lot of people, when they buy a condo or think about a condo, they think about it like an apartment, like they, me, and you are they, right? You are part of they, right? So you have to think of it more like communism, where, you know, everybody's kind of pulled together, you know?
I don't know about that.
Well, that's the way it is,
I'm not going along with the Here's what I am going along with. Listen, if your roof leaked and it's not an insurance claim, an insurance claim denies you, who's going to pay for your roof? You are. And if you don't have the money, you don't have the money. But somehow you're going to have to figure it out, or else you're going to get wet when you sleep. So you're going to have to figure out. So it's no different. But listen, it's no different if you're renting, because if that landlord has a roof leak and they can't get the insurance claim, then what happens? He's got to somehow come up with the money, or you got to get out of the house while he fixes it. So there's always a price to be paid for it, no matter what circumstances we're in.
Yep. So number 2 law, so that was the first one, was the inspections. Number 2, which I think is probably more important, I think
the reserve study.
The reserve study, right? So they have to do what's called a SIRS, a structural integrity reserve study. And what that does is that makes sure that the association has allocated and will continue to allocate funds towards major structural repairs, right? And major structural repairs, I can't rattle off the list, but I know it includes things like roofs, doors, windows, siding, plumbing, electrical, HVAC, if it's common, right? And so, and a lot of people have this misconception that it's when they say they have to be funded at 100%, they don't have to have all the funds to replace the roof day one. But if a roof is scheduled to last 20 years, then, and the roof is going to be, you know, $200,000, then they have to save $10,000 every year specifically towards the roof. And that money goes into an account. It doesn't have to be a separate physical account, an accounting account.
It's a reserve account
that says this $10,000 is earmarked for the roof, and next year it's 20, and the next year it's 30, and the next year it's 40.
I want to just talk about that from a lending perspective, because a lot of people don't understand that regardless of how well the customer qualifies to buy a condo, the condo has to qualify for Fannie Mae, Freddie Mac, HUD, or VA. You're not getting a mortgage if the condominium does not meet their requirements. Now, what's happened, though, with all these condominiums and the roof claims and the insurance going up, they have depleted their reserves. So they don't have enough reserves. So they've fallen off the Fannie Mae, Freddie Mac, HUD list. So now when you go up to look at a condo to see if it's an approved condo, the ones that were always approved, most of them are no longer approved. I was looking at condos in Orlando, and I'm going right to the zip codes of the metropolitan area. And there's few and far between that are even on the list anymore. And some of them, their list expires in just a few months. Their approval expires in a few months. If they don't come up with enough reserves and meet all the requirements, they're off the list.
That's right. Now, you and I, you know, we ran into that a few months back, right, with the condo that my daughter's in that we wanted to refinance, and it had gotten removed from the list. Now, thank goodness we were able to get it added back in, because, you know, that really impacts the value of that.
Well, that's condo. Because I thought, if I recall, it was because they were short on their insurance.
I think it was a misunderstanding about them being short on their insurance. It turns out they weren't, but yeah, that's what it was, right? It was an insurance thing.
But that's another thing that can impact them, right?
Absolutely. Absolutely. Yeah. So number 3, and I think, again, man, I don't know which one I should say is more important, because they all kind of coincide and work together, right? So the third one, it does some things for HOAs as well as condo associations. But on the condo part, the most important thing, I think, is that it is forcing the condo management and board to get education.
So this is that third thing, that is the rules around.
That's right.
The rules around training and education.
It's HB 1021, and I'm reading it over here, right? So it says that they have to have educational training requirements on milestone inspections, structural integrity reserve studies, elections, record keeping, financial literacy. Imagine that, transparency, levying of fines, and more. right?
Now,
So
keep in mind, these are volunteers that live in the condo
That's
that
right.
volunteer for this. Now they're going to be required to have training, which actually I don't think is a bad thing. Listen,
No, I think it's a good thing, because
if you're gonna volunteer to be part of a board of directors of some sort or another, then you should have some type of physical acumen, financial acumen. You
that's right.
should know the rules of engagement. So I don't think this is a
all
bad
too
thing.
often these HOA boards, are, like good old boy type situations where they get their friend on and whatever, and then they try to, we're going to make this happen and we're going to make that happen. And what they miss is the important stuff, like keeping the freaking building up. And, one thing that I can tell you right now, and I see people buying condos all the time, you don't want some jackass in charge of your HOA.
No, you don't.
Association.
Yeah, but you know what? Here's what happens. I don't want that job, but the jackass does.
It's kind of like politicians, right?
It's a lot like politics, right?
Yeah. So anyway, I'm doing a series of videos on my YouTube channel, which I have down below, moving to Orlando, Florida. And I'm going to be doing a couple of different videos on condo associations specifically and what's going on in the condo market.
So if you're out there and you're listening to our show, I need you to check out Tom's videos. I'm going to tell you, these aren't just run-of-the-mill videos. He has put a lot of time and effort to helping people understand not only what's available in particular communities, but what are the amenities? What's it like to live there? What are the stores like? What are the restaurants like? What are the parks like? So you've put together a lot of information, spent a lot of time and attention on this. And I think you had I don't know, what is 800 views in one.
I actually, one of my videos just hit over 1,000. So I was pretty happy about that. Yeah. And I know that, that's actually a small number compared to a lot of the other ones.
I understand.
It's starting to grow. It's growing
but
fast.
We're not real influencers, huh?
No, but you know what?
We're just grinding out real estate and mortgages.
So a buddy of mine that's also an agent, his were averaging around the same, around 500, 800, 1,000. And then he hit one that hit 40,000. And every video since then has hit 5,000. So, you just got to catch the right one. We just put out our latest one. We do them every Sunday. We release a new video. And our Sunday video this week was, we took a trip on the Sunrail all the way from DeBarry, all the way down to Ponciana, stopped at every stop, talked about the town in that stop. Then we went downtown Orlando and ate some lunch and then came back up.
Fun.
So
that's going to be a great video.
Yeah, it's a great video.
One last thing before we wrap up here, though.
Yeah, man.
So, we talked about the elephant in the room, and that's interest rates are higher, closing costs payments are going to be higher.
Yep.
But you should buy. But here's the people that need to buy, and it's not always first-time home buyers. They're in the loop, but they're not the only ones. So we have the 4 Ds. Okay. All right, we're going to bring on your 50. Okay. All right, we got divorce. It's an unfortunate situation, but somebody needs to buy a home and somebody needs to refinance the one they're going to keep
or sell.
Yep. We got diapers, having babies.
Yep.
You don't want to be living in the apartment complex having a baby.
Nope.
You don't want to do that. You need to get your own home.
Or you want to move from the 3-bedroom to the 4-bedroom.
You want to move up. Move up, right? You need a bigger house. Then you have diamonds. So we got marriages, right?
Yep.
So those are a good reason. People are coming together and starting families and starting lives together. And then we have death. Okay. Death is important because we lose people. It's going to happen sooner or later, every one of us. And then somebody's got to sell that house.
Correct.
Right. So that's very important. And then your favorite one now.
Number 5, man, it's downsizing.
So we got all these baby boomers like me, and I'm a late on the end of baby boomer. I'm not in the middle. Okay. I'm on the late end.
I'm an early Gen X. So,
I'm not. Yeah. So I'm at the tail end of the baby boomers. So, but that is downsizing, which is it. Listen, that's in my future. It is. I don't know how long my wife and I want to keep the big house on the lake. Maybe grandkids are going to keep me and I'll hang on to it longer, but sooner or later, I just need a little house somewhere that is low maintenance. And that's downsizing for me. As you get older, you want to do those kind of things. Listen, we're running over today.
We did, but it was a great topic. Great couple.
We covered a lot. listen, you have a great week, and I look forward to seeing your videos.
Yeah. Talk to you soon, man.
Take care.